You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, let's find out together, shall we? It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com. Reminding you of two things here at the top of the show. First off, if you're just listening to this, you're missing out. Make sure you're listening to the full network, wherever you get your favorite podcasts, including on the old tubes. And then, of course, if you want to go above and beyond, you want to join us for Options Oddities after Vol Views tomorrow. You want to get awesome pro Q&As like we just had with our good buddy, Mr. Tony Saliba, earlier this week, and a lot of other fun stuff, giveaways, live streams, real true exclusives that nobody else gets, including whisper of an impending Vol Deathmatch 2.0. Only place to get it, theoptionsinsider.com/pro is the place to go. And you know what? Speaking of the Vol Deathmatch 1.0, we have a participant in said deathmatch joining us in the old CME Group hot seat today. None other than our good pal, Mr. Russell Rhoads from Indiana University, a.k.a. the once and future Dr. Vix. Mr. Rhoads, welcome back to the show. I guess you must like me. You're doing double, nay, triple duty this week, sir.
I am doing. Is if I survive through tomorrow, I will be back for triple duty on talking about volatility. But I think of this show is kind of like a pseudo high volatility show because we get into one of the great things about commodity volatility is that it shifts based on outlooks. And I was almost late to the program because I've written a new little tool in Bloomberg that shows me when the call skew is positive and the put skew is positive on different commodities. So I can quickly discuss that today.
Oh, you can do that. Or you just pull up the Bantix reports and follow along. It's all there, too. It's easy to find as we keep on rolling. Speaking of some reports, let's get to it right now. It is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting things up to the light side and to the dark side this week at CME Group. If you follow us on socials, you'll see we tweet out this full chart right before showtime, so you could get a sense for yourself of how the week is shaping up. And right now, looking at this chart, I'd say we're hanging out 70-30, maybe 65-35 green over red. That said, if we re-rack these right now, this second, I'm sure maybe equities would at least take a bit of a downturn, and maybe that would drag down more. Either way, though, we are still biased towards the green. We also have the largest percentage mover of the week to the light side. So a lot to unpack. But Mr. Rhoads, you are our guest, sir. I will give you pride of place. You get to choose where we start.
I'm going to go dark side first because I feel like we'll talk a bit more about light side maybe when we start breaking down this particular market. So that is I gave it a lot of thought, and that's what I've come up with.
I could see the smoke churning right before you said that.
Like, oh my gosh. All right, I whiteboarded it. So on the dark side, coming in at number 5, WTI crude oil down 1.28%. Apparently, there's a lot more oil in the world than is needed right now. Number 4, my namesake, Russell 2000, down 1.31%. It just seems like small caps just can't ever get out of their own way, can they? Heating oil's down 1.67%. Bitcoin, which was number 4 to the dark side last week. Has it been dark side top 5 2 weeks in a row ever? It just seems like they buy on weakness so darn quickly.
Yeah, you're right.
You know what I'm saying? So I don't, but it's rare that, Bitcoin goes down that much. I can't believe that's not headline grabbing. It was number 4 to the dark side last week, down 4.04%, down 2.75%. This week, and the market, it seems to pop in the top 5 in both directions. We probably should be using it as an economic indicator, or should have been when we weren't getting the numbers. Lumber down 5.02%. I know from personal experience that there are a lot more people out there wanting to sell houses than buyers. Maybe that's showing up in the lumber market.
You are doing the old house swap right now, sir.
I am doing a house triple swap. So I don't know who does things like that, but I do. All right, to the light side. And starting out, number 5 on the light side, it's very appropriate because it's the shiny stuff, or one of the 3 shiny stuffs on the light side. Gold up 5.51%. Still kind of on a tear there, but by far not the most powerful metal week over week. Oats, something that I really spend a lot of time analyzing, 5.69% after being up 4.51% last week. And then natural gas, which trends so freaking hard, up 7.51% this week after being up 10.21% last week. Whenever I see natural gas doing things like that, I got to lob in a call to Carly. Then finishing up with metals, top 2 on the metals, palladium up 9.29%. And then finally, I think a lot of people were speculating when gold was making a move and silver was lagging a bit, still making a move, but lagging. Was it ever going to do some catching up? And goodness gracious, it has. Silver up 11.05% for the biggest mover on the week, and a double-digit mover at that.
Yeah, we have a lot to unpack in the shiny stuff, including the another leg of an ongoing mystery in the world of all things shiny stuff. But before we get there, listeners, to the world of C-Vol we go. Russell said at the top of the show, this is very much a stealth vol show, and that is the case. You can run these reports for yourselves. Just type CME Group and C-Vol, C-V-O-L, into whatever browser you're running. That will get you to the dashboard. If you don't have a CME account, you have to make one. It takes 2 seconds, and it's free. And then you can get access to all this freaking data we're giving you on the show for free. You can't beat the price. If you want to line up with the show, go to the aggregates tab and then go to the 1 week range for the high-low range. And you'll see right now we have kind of a mixed week. We have half of our names popping hard, pinning the needle to the upside from a vol perspective, and the other half kind of drifting to the downside there. We'll start to the upside, up to the metals we go. Metals vol getting juicy again this week. So I guess we're just roaring back to life in the metals and the underlying and indeed in the vol. Metals vol up nearly 4 points just today, 3.95 points. So metals vol getting spicy again. 27.62 is where it's hanging out. That is the high print for the week. The low 20.98. So you're talking over 6.5 point range in metals C vol for the week. That is not normal, listeners. This is another wild week. I think we're gonna have to talk a little bit of metals on the show today. But before we get there, to the world of energy we go. Russell was just talking about WTI on the movers and shakers. Energy vol also getting spicy this week. 61.93, so almost 62 right now. Up over 2.5 points just today. And if you look at this report, listeners, it will also show you the trend. Energy is one of two groups, two buckets we're going to look at here today, where the entire week they've been bidding up vol every session. So that is kind of rare in and of itself. 61.93, that is the high for the week. The low, 53.72. So again, a wild range in the energy C vol this week as well. Wild stuff. And you know what? Saying, don't forget about me. We got the aggregate commodities C vol. 39.87, up nearly 2.5 points just today. So vol getting spicy in a lot of the areas that we're looking at right now. This is another one where vol has been bid up every session this week. That is the high print for the week. The low, 34.15. So again, over a 5.5 point range just in the commodities C vol this week. Again, kind of wild. Just when you thought vol was done, maybe vol taking a bit of a hiatus. Nope, getting bid up across the board, including in FX, a land where vol goes to die normally. Now, when I say bid up in FX, take that with a grain of salt because we're not talking a huge move, but still, nonetheless, FX C vol 6.8, up 0.11 today. That is the high print for the week, the low 6.5. So gaining a third of a point in FX vol land is no mean feat. Then to the world of Treasury vol, we're hanging out right now. The Treasury price vol, 456 right now, off about a quarter of a point today. So again, that's a pretty big move for Treasury price vol when you're starting at a baseline of around 4 3/4. That high print was 4.81, the low 4.47. So hanging out towards the lower end of that range right now. Then we have the aggregate C vol below that, 20.13 right now, off nearly a full point just today. That is the low print for the week, the high 22.41. So they're coming for ags vol this week. And bringing up the bottom of our list is the Treasury yield vol, 86.82, off 6 1/4 points today. That is pretty close to the low level for the week. The low is 83 3/4, the high 93 pretty much exactly. So hanging out towards the lower middle portion of that range. So kind of a wild dichotomy on the vol front. We have a lot of complexes where vol is through the roof, and then the other complexes where vol is going to die. But one of those complexes I mentioned, and Russell certainly mentioned as well, where vol is bid, where the underlying is bid, that means we got to go there first. It is time to get precious. It is time to head to the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, to the shiny stuff we go. You know where to go to follow along with the show. CMEgroup.com/TWIFO, TWIFO, /TWIO, TWIO. Both of those should work. Those will get you to that TWIFO dashboard. Once you're there, go into that asset class drop down list. You're going to go down all the way to the bottom of the list to metals. Then in product family, you're going to kick it off at the top of the list with precious, and we'll kick it off in the big dog, which is gold. Gold looking spicy again, 41.60 as we're kicking off the show, gaining 150 handles just since Monday, listeners. So a wild run. If we go back to the end of our show last week, it's up over 5.5%. So another good run in the shiny stuff. Also putting up some numbers this week. 381,000 contracts on the taper. That's a pretty spicy week in gold options. Usually on a good week, we'll see about 250,000. So well north of that this week. Things are popping off. Mr. Rhoads, you and I haven't had a chance. We've touched on gold from a vol perspective, on vol views, and talked about gold versus VIX. But in general, share with our listeners here on TWIFO, sir, your thoughts on this just massive runaway run we've seen in the shiny stuff, in particular gold, up over 50% just year to date.
Well, it's, we don't think of, unfortunately, I don't think a lot of people pay as much attention to gold as they should. But there was this thinking that the big safety risk asset was going to be Bitcoin and not gold. That Bitcoin was going to be great if we experienced inflation, and because it was the new digital gold, which it did not do well during inflationary periods, even though it's come back. So gold has always been this standard bearer that's supposed to hold up better during inflation. It's something that you gravitate into when we've got geopolitical uncertainty, which we seem to have. And you've seen, a big portion of the initial push on gold was China loading up, India loading up. And I think there are some geopolitical concerns that they have been hoarding gold around. And because it's not a normal, supply demand situation there seems to be a lot less supply floating around. And because as I was saying, some of the governments don't like us very much, seem to have been hoarding gold, something that you might do before a big military action, et cetera. So I don't know if that, if you can, we'll get to Monday morning quarterback in a year or two, once we get back to some relative normalcy in the world. But to me, it has felt, and I feel like I've brought this up before on earlier shows. To me, it's felt like some governments are a bit concerned about the world and have been grabbing as much gold as they can.
Are you pushing that global thermonuclear war angle again?
I'm not pushing that button.
But you're right. It has been some wild stuff afoot here in the gold markets. You and I were debating earlier this year, well, not that long ago, I'd say a month and change ago, when gold was hitting new all-time highs literally every day, broke through 4,000 for the first time ever, and VIX was kind of just languishing. It seemed like gold was giving us signals that vol was not. Now it seemed like we were talking on the show last week, maybe it was just the fact that gold was a leading indicator, because then vol was starting to catch up as gold was selling off again, so they were starting to trade places. Now we have vol popping again today in the equity markets and gold popping again. So I'm not sure where that leaves us, Mr. Rhoads, in terms of which is the leading and which is the more accurate indicator of sentiment. Or maybe, as you point out, maybe one is just an indicator of hoarding before a massive global conflict.
Yeah, I really do think that the gold thing is more geopolitically oriented. As far as the crypto thing, I did an excellent job getting out in the 30s, but as far as it being some sort of reserve, I've always questioned that just a bit. I feel like if we do end up in some sort of gigantic conflict, how much certainty is there what's being saved on hard drives in places?
That is a good question out there, listeners, as we go out in gold. And you know what, Mr. Rhoads? I see it's printing again today, and it does bring a smile to my face, because we've been talking about, shall we say, some interesting paper in gold world. We said there's over 380,000 contracts going up this week. 20,000 of it is once again in these deep in the money Dees calls. And for whatever reason, I don't know why they fixated on this strike, Mr. Rhoads, but week after week now, it's the Dees 2600s. Obviously a deep in the money contract, not the kind of thing we normally see traded in gold. Usually it's out of the money calls where the action is. This is obviously not the most capital efficient way to go about trading gold in any way, shape, or form. But that said, another almost 20,000 of these things have traded again today. Again, over 1,500 handles in the money for these calls, including another 5,500 today. I had to do a little bit of digging while you were talking to see exactly what are we up to in these wild 2,600. Looks like just today, Mr. Rhoads, we have the 2,600 26 quarter vertical again. Why these two? And it's 2,600s every week. They refuse to give up on that one. Going up again it's a $25 vertical, going up for $25, listeners. That traded over 2,000 times today. 1,600 of the 2,600, 3,000 vertical. Again, a $400 vertical going up for, surprise, surprise, $400. So we've got a bunch of trades, 2,600, 27 half, 1,000 times For whatever reason, they're doing what are effectively carry trades here on these strikes. But 2,631, again, a $500 vertical going up 500 times for $500. I don't know why they have zeroed in on this strike in particular. You could do this with just about any in-the-money strike, you would think. But that said, Mr. Rhoads, have you noticed this explosion of paper? And what are your thoughts?
I hadn't, but you got me scratching my head on this one big time, and I'm trying to figure out if there's some sort of weird Fibonacci retrace.
Yeah, why that strike?
You know what I mean? Well, I can't. I don't know. I can't. I want to come up with it. I feel like I'm pretty good at telling stories about numbers, but I can't figure this one out to save.
Yeah, I mean, if you want to do it, you could do this 3,000, 3,500. You could do this a lot of different ways. You don't need to go 2,600s day after day for weeks. And yet that's what maybe the AI is just grokked to that strike, Mr. Rhoads. And they say everything you do has to be keyed off the 2,600s in some capacity. But if you're wondering, listeners, are the 2,600 calls in December leading the dance in gold? Yet again, the answer is yes, and by a country mile, by almost 4x anything else we've got on the tape out here today, listeners. Just absolutely wild stuff. And then behind it, we have the 3,000s, nearly 7,000. Again, that's related paper. It's vertical paper going up. And the 26 quarters. So this 2,600 in related trades is really gumming up the works. If you want some more, shall we say, relevant paper, we have to scroll down a little bit to a couple of different choices. We have 5,500 of the 4,200 calls going up in December. Again, that's the kind of paper we've come to know and love in Goldland. Near-term, out-of-the-money calls. In this case, not that far out of the money. Trading about 5,500 times. Looks like 2,000 on Monday was the big day. All opening all week long. You know, I got so excited about those 2,600s and so distracted by them, I buried the lead in terms of vol and skew out there. So let's go out there now. Dees has about 11 days to go. So it's very much a near-dated contract right now. Vol-wise, like we said, we're seeing vol tick up, and that is the case in gold as well. 23.60 right now, up 5.7 points just this week. So vol getting spicy again after they came for vol over the last few weeks pretty aggressively in metals. We're seeing it get bid up again, which is kind of wild. Skew-wise, the skew is almost gone, which is also kind of wild. Usually we see a little bit of a bid to the calls, listeners, and a discount to the puts. That's just the way metals tend to trade. These days, that is gone. The puts last week, 0.3% cheap. This week, 0.1% bid. So that's effectively flat. And then the calls last week, 2.1% bid. This week, 1.3% bid. So from a metals skew perspective, that's also effectively flat. So kind of wild stuff. Mr. Rhoads, you know, nonsense 2,600 verticals aside, even though it's kind of hard to ignore, it's the elephant in the room out there volume-wise this week. But what are your thoughts on the relative dearth of skew in the D cycle right now, sir?
It's pretty interesting. I was, you know, like I said, I was playing around with the, with the numbers, and it does not look like anybody wants to get in the way with respect to the to the upside on this thing. That's not how you're supposed to trade commodities anyway. You're not really. Counter trend trading is tough. How's that? And if you're going to counter trend trade, you typically would want to maybe take some options into account. So if you do think that we're rolling over and you got, expensive calls, maybe there are some opportunities to, sell some calls far enough out of the money that you can sleep at night and just hope that, nobody starts a fight anywhere that results in gold up, up another 20% very quickly or something along those lines.
Well, if you want some more action, listeners, in gold, and you want to go out a little bit, let's go all the way out to January of next year, shall we? And right now we're seeing a decent amount of action out there as well. By the way, if you're wondering what is the vol in Jan gold, it's 22.56, up about 3 3/4 points. So getting a little spicier out there as well. A little bit more juice to be found on the skew out there. The calls were 5.4% bid last week. They're still pretty bid, 4.8% bid this week. The puts 2.7% cheap. So that's starting to be a little bit more reminiscent of the gold we've come to know and love. But it's downside puts that are lighting up the dance in January this week. It is the 40 half puts, the 40-50 puts, going up 5,600 times. That is leading the dance out here this week, listeners. Interesting stuff. Again, the big day for these was Tuesday, 2,400 contracts $1,600 on Wednesday, $1,400 today, and only a couple hundred on Monday. It looks like all opening paper, the OI coming into today is about 3,300. So that said, Mr. Rhoads, what are your thoughts on a little bit of put action, the 40.5 puts in January in gold, sir?
I mean, if I were gonna try to take the other side of the move, and I can't, it appears that they're buying these, right? Even though the skew is even though the skew, is leaning toward the call side still, but it looks to me like these are buying. And this is exactly, the kind of trade that I would give some thought to doing, is something that I know how little I can lose if I'm, if I'm thinking that I'm calling the top in gold. I don't know what kind of catalyst would get gold to start moving lower. And I do feel like the trend is so strong, it's going to take some sort of massive thematic change. Maybe the thematic change is we're all getting along, and all the central banks are going to start to sell a little bit of their gold. The other thought that I did have, and one of the things that I think could put pressure on gold, but I can't figure out the timing on it playing out, is some developing economies that are probably having a difficult year economy-wise. If any governments need to raise a bit of cash, maybe they will have to sell some of their gold hoard. But that's the best I can come up with a bearish story on gold.
The great gold hoard of 2025, listeners. Is there a dragon sitting on it with one eye open out here? I did a little digging while you were talking, Mr. Rhoads. Looks like the 40.5, 38.5 put spread, so a 200 handle wide put spread, going up nearly 1,000 times today for prices around $35.70. So that's in January, Mr. Rhoads. Does that make him a little bit more palatable, maybe doing that put spread versus just buying the put, sir? Because you're right. I kind of got the feeling that people were buying those, even though historically they're not. And the skew is telling us they're maybe not. But it felt like they were buying it, sir.
Yeah. No, I feel like, one of the things with commodities, and one of the things that we've been doing a study on following block option trades. And one of the things that we're finding is when people buy options, if you're doing it in a systematic way, you might do 50 trades and you make money off of 3 or 4. I feel like if you were continuing, let's just say that you think that gold's going to break trend, and you decide to, buy a put, sell a farther out of the money put to get a cheap trade on. Well, you're going to, if it's finally the moment that gold falls apart, you're going to miss a big portion of that potential profit. So the lowering the cost of each individual trade when you're buying an out of the money option, and I think when you're buying an out of the money option, that's kind of a speculative. It's, according to Delta, it's less than a 50% chance that you're going to benefit from it. But if you are doing that, I feel like you're giving up the benefit of the 2 or 3 times that you really get it right on those. And if you're going to do that, you're going to, again, let's just say you do 50 trades that are directional, but you always do, a vertical spread that caps your profits. Even though you're lowering the cost of all of most of your trades, you're not going to make enough profit-wise off of the few that work out to offset the cost of all of the trades. So I'm not real wild about putting a vertical spread on. What I do kind of like is if we do start to get the move and you own a put, maybe selling a farther out of the money put as opposed to monetizing, because implied volatility will probably be going up at the same time.
Interesting. Not a fan of the verticals and the futures options. Fascinating stuff. That's why we talk about it here and crunch the numbers here on the show, listeners. Speaking of crunching the numbers, I was just talking to our good buddy Uncle Mike. He's one of the biggest silver bulls I know. So we gotta talk a little bit of silver here on the show. Even though Uncle Mike famously, perhaps infamously, liquidated all of his silver just last week. So he's out. He's out on the silver train out here right now, which is kind of wild, seeing silver roaring back to life yet again. A 50 handle in silver. We were just saying not that long ago on the show, man, 40 seems kind of optimistic. And now here we are, 52 and about a quarter, up over 4 handles just this week, or 8.5%. Obviously, if you go back to the end of our show last week, silver number 1 with the bullet up over 11%. So Maybe Uncle Mike is angry he didn't wait a little bit, but you know, the run's been so good. You got to monetize at some point. Looks like folks are monetizing or just slinging and rolling them bones out here in silver, listeners, because there is a lot of flow going up in silver this week. Almost 102,000 contracts already. That's over 2x what we see in a pretty decent week in silver normally. So over 100,000 contracts, that's pretty active. Let's go out here right now. We don't have the weird in the money flow in silver, at least that we're seeing in gold. Maybe the AI hasn't grokked to silver yet, but the action right now, 32% going up in the DEES contract. Again, has about 11 days to go. The vol in DEES silver, almost a 38, 37.87, up about 8.8 handles just this week. So again, talking about vol getting spicy. This vol is getting bid up like crazy. Skew-wise, we're seeing pretty similar to what it was last week. The puts were 2.4% cheap last week. This week, about 2% cheap. The calls, 4.8% bid last week. Slightly less than that this week, 4.2% bid this week. But still a lot of action. Mr. Rhoads, you know, silver is usually the stealthy name compared to gold. You know, silver usually hangs out in gold's shadow. But this week, and indeed this year, silver is kind of becoming a star on its own, sir. What are your thoughts on usually the number two stepping up and taking the top spot, sir?
Well, silver does have an industrial component to the pricing. I mean, there are, you know, gold is used industrial, but not nearly as much as silver is. But I wonder if, you know, some of the economic uncertainty, et cetera, has been hanging over silver relative to gold. And that's why, you know, gold was outperforming for some time. I don't know if we're feeling better about the world, you know, maybe that the tariff thing might be a bit more settled, et cetera. But, you know, maybe that component is getting out of the way, and now we're seeing that catch up. And, you know, when gold was, you know, in the upper 30s, silver was in the upper 30s. I apologize. I'm certain that there were people that were maybe buying the 40 calls and selling the 45 calls that are not happy about that now. So just, you know, again, within the, and I think vertical spreads are awesome in the equity space, but I'm not I feel like the real profit in the commodity space is made when you catch a trend following, you know, the everybody's looking for the trend followers when performance, when markets have been trending heavily like they are now. So, you know, I feel like that should translate to, you know, pay up and don't cap your profits. I did a CFA article on option trading with Don Chance years ago, and he liked to refer to giving up the sweet spot of performance when you sell options to pay for other options. You're definitely giving up the sweet spot in the commodity space sometimes.
Well, certainly this year you've been giving up a lot of upside if you've been doing verticals in silver. I mean, obviously this is an aberrant year, listeners, but still just absolutely wild stuff. You know, it's a wild year when Uncle Mike, who's been sitting on silver collars and silver for as long as I've known him, over a decade, lets it all fly. Then you know silver's been on an absolutely wild run. And again, putting up a lot of paper this week, 101,000 contracts. Let's go out to what caught our eye, and we're going to go all the way out, listeners. Well, the lion's share of the paper is going up in DEES, 32%. That's what we normally tend to expect. But what caught my eye was a little bit longer term paper to the upside. We're going out to March. It's the March 60s. By the way, if you're wondering what is March vol in silver, it's a little over 34, up 5.25 points this week. So March vol getting spicy as well. The calls in March, by the way, listeners, they were 14% bid last week. The puts 7% discounted. That's what we've come to know and love in the precious metals. Coming back to earth a little bit this week, 11.3% bid, and the puts were 7.7% discounted. Still a hefty premium to the calls. But what caught my eye, listeners, were the 60s. Yes, the March 60s. That's the level we're talking about here in silver right now. Again, we were just talking 40 not too long ago, listeners, and kind of half joking that maybe that was a bit of a bridge too far. Now we're already north of 50 and talking about the 60s lighting it up in March. If you're wondering what the price is for these, the Jans are trading for $1.14. All right, so yeah, I don't have the prices here for the March, I don't think. If you want to get even narrower dated on the flow, listeners, D60 is obviously pretty far out of the money, not much time to go, about 19 cents. That said, I don't know, Mr. Rhoads, 60 by March. I mean, that would, if you had said that, a month or two ago, I would have laughed you off the show. And now it's fairly relevant. What are your thoughts on these and just all the madness in silver right now, sir?
Well, they're trading. You can hear me, right?
Yes.
Okay. They're trading at about $1.90 right now. Those March ones. I was pulling the quote up. And, okay. I wouldn't be too frightened. I mean, I was thinking if you're going to sell a call spread, maybe you go that far out after talking about not liking.
Oh, so now you talk verticals. All this smack about verticals.
I said sell. I said sell. I said sell. I said sell. But, if you start to see some aggressive things like that and you're like, man, I just don't see that happening. Well, they're bumping that implied vol up for you. So, maybe take a look at selling, selling those 60s if you don't think silver's going to get up to that point. That's just taking advantage of somebody else speculating in that way. I did see, there was pretty good volume in the 65s as well. But I did note, I don't know if you saw, I think it's July, there was open interest in the 160s.
At this point, nothing surprising. Yeah, 160.
There's five.
Yes.
Somebody traded 500 of the 140s and 500 of the 160s. I'm just going to assume I'm comfortable selling that call spread.
That's a great call. It's a great covered call as well. If you get all the way up there, you're partying. Partying. Yeah, it looks like it traded. You're right. Traded 500 times today. So we were just talking about nonsense in the money. I guess we have to make fun of the nonsense out of the money in silver as well. That's wow. That's why I love the metals, Mr. Rhoads. They are, even though as long as we've been talking about them here on the show, they never fail to surprise in all sorts of nonsense. So if you want action on a 160 strike, listeners, it is there for you by July. And what is going? I hate to say it, Mr. Rhoads, because I hate to feed the tinfoil hat crowd, but I think if we're hitting 160 in silver by next year, maybe some of your conflict hypothesis has come to pass, or what do you think?
If that happens, I've often made a joke about, if long the 100 VIX calls pays off, we're going to be fighting each other for scraps of food. Who cares where VIX went? I have a funny feeling if silver is in it has gone up fourfold. If it goes from 40 to 160 in 3 months, we got big problems. We got big problems. I'm going over to my neighbor's house who's got the big gun locker. That would
be pretty wild out there. We just put a flash poll up for you folks, listeners. If you are intrigued, we said March 60 calls trading for about $1.90 in silver right now. That price. Are you a buyer or sold to you, or are you just saying 60 by March? What the hell is even going on? What are we even talking about here? And you know what? If you choose that one, I would not hold it against you. But it is live right now. Just went live, so you folks listening after the fact on the podcast can play along as well. Maybe we'll come back in a little bit and talk about that. Well, we talked a lot of metals already on the show, Mr. Rhoads. It's hard to deny them. They are inescapable right now. But if there are any other complexes you want to sneak in, have at it, sir.
You want to sneak in energy just real quick,
all right,
because we're kind of on a macro theme.
Let's do it. To the world of energy we go.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful world of energy. Energy hitting both our light side and our dark side this week. We have WTI coming in at number 5. We have heating oil coming in at number 3 to the dark side. And then we have nat gas coming in at number 3 to the upside. Of course, you know where to go to find all this. Go into that report, pop out of metals, and go up a few slots to the energy bucket. And then, Mr. Rhoads, what's catching your eye? You want to go WTI? You want to go nat gas? What's catching your eye?
Let's go WTI.
I had a feeling you're going to say that, which is why I pulled up WTI on my list. 58 3/4 is where it's hanging out right now, listeners. Off about $1 this week, or 1.6%. Obviously, if you go back to the end of our show last week, WTI off about 1.25%. So it's kind of been in the same range for a little bit. Volume-wise, actually a pretty decently active week. We used to expect 400,000 to 500,000 contracts for a decent kind of average week in WTI. 663 on the tape right now, so pretty active, not threatening a million, but also not back below its average either out there. And if you're wondering, where is the paper this week? Kind of interesting, kind of speaking to the near-dated nature of the energy markets. You know, we always talk about zero DTE in the equities and some other products. But energy making up for lost time, 43.3% of the flow this week going up in the DEES contract that has a whopping 4 days to go, listeners. So not quite 0 day, but pretty freaking close, 4 days out. By the way, if you're wondering what is the vol in DEES, such as it is with 4 days to go, the DEES vol 26 and a quarter, off 3/4 of a point. If you go a little bit farther out in time, though, a couple of weeks to, shall we say, meteor contracts, that vol is hanging out at about a 27 to a 28. So a little bit spicier, gaining about a point out here this week, which kind of goes back to what we were just saying earlier in the show about the C-vol out here this week. The energy C-vol getting bid up every day this week. But that said, Mr. Rhoads, you know, the fate of crude oil has been a hotly debated topic for a while. Can it get north of 70? Can it break below the 60 handle to the dark side? Obviously, right now we have done so. But what is catching your eye out there, sir?
It looks like they think there's more downside. It really does look like there's more downside. Puts are expensive, calls are cheap. This was the one that I was trying to do. I said I was messing around before the program. This is the one where I was just looking historically. What's the call versus the put? You know, they flip flop based on where people see the price risk. But just, you know, it's gotten to a point where recently, just a couple of days ago, or late last week, sorry, we had an instance where the standard out of the money call skew was lower than the at the money implied volatility. The call skew out of the money call skew was slightly negative, looking at 5% out of the money 30-day standard numbers. And it's basically flat, depending on the day lately. So there's not a whole lot of, not a whole lot of love for the upside, or even anybody speculating to the upside in a massive way. And with the implied vol so cheap for the out of money options right now, maybe now's the time to be prepared for some sort of price spike. But it really does not. The option traders there's nothing I see positive in the option market.
Yeah, it's a put.
And I say that, and oil will be 70 when I come back next month. But it doesn't look good right now.
Kind of a put annihilation this week in terms of they bailed on every put strike they had in December this week, listeners, and every day this week as well. I'm hard pressed to think of the last time I saw such unanimous paper. The big dog out here this week is the 58 puts in December, trading 32,000 times, 10,000 on Tuesday, 9,000 Wednesday, 5,600 today, 7,000 on Monday. Closing every day this week. Remnant OI is only 12,000. 57 puts also active every day this week. 16,000 total on the week, closing every day this week. 60 puts, 16,000 as well, also closing every day this week. Double puts, 55 puts, trading about 15,500 times this week, closing every day this week. And then the 59 puts, 14,500 of those going up this week, all closing I can't remember the last time we saw closing on every put strike. Now, again, we have sold off, so it makes some sense. If you got some puts in your back pocket, you want to take them off and get the heck out of Dodge, especially when you only have about 4 days left. The clock is ticking on those, but still, just wild stuff. The put skew slightly bid in this 4 day to go contract, so there is potential. Some folks had overwritten those and they're buying them back to close, but either way, just a ton of near-dated puts being closed. If you want to go to the upside and for some opening paper, then how about the 61s, listeners, trading about 25,000 times? Again, this is all in the DEES, so about 4 days to go, listeners. 9,500 on Tuesday, slightly closing there, but then about 8,500 on Wednesday, 3,800 today, 3,800 on Monday, opening on both days. Only about 13,000 open on that strike there as well, so a little bit of back and forth paper even there. And then the 60s going up about 17, almost 18,000 times this week. The big day was Wednesday for those, 6,200. 5,000 today against an OI of about 21,000. So a lot of closing paper on the puts. My eye is just drawn to that. But if you go a little bit farther out, listeners, there is a lot of interesting stuff afoot out here as well, including if you want to go extreme downside, how about April 45 puts trading 5,400 times this week? Looks like all of that going up pretty much on Wednesday, 3,500 on Wednesday, about 1,800 on Monday. Potential for some vertical action there. Looks like it might have been a 45, 46, 50 put fly going up out there, listeners, even though it's kind of inverse the other way. It's 2 by 1 instead of 1 by 2. So kind of interesting out there, but that seems like Wednesday was the big day for the 45 puts and the 46 puts and the 50 puts all opening out there. So April, again, is a little bit of time. Can we hit that? By the way, that future in April is right around 58.5 as well. So not that dissimilar from where we're hanging out in the front portion of the curve. And then there were some other interesting strikes. 45 puts also active in May slightly as well. So how about 53 puts in January, listeners, trading 6,200 times this week. Almost all of that was on Tuesday. 5,700 going up on Tuesday. The rest just kind of paltry. And that was all opening on as well. So does seem like downside is in play, closing on the near dated stuff, which makes sense, only 4 days to go, and then opening a little bit longer term. So kind of wild stuff. You want to sneak in a little nat gas as well this week, Mr. Rhoads?
Absolutely.
All right, to the explosive world of nat gas we go, listeners. Pop out a crude oil, and you're going to go down 2 slots to nat gas in that product family. And then we're going to go see what the Widowmaker is up to, listeners. Coming into this portion of the show, 460. Just a wild number. I get it. We're in, quote unquote, the start of winter where the seasonality kicks in nat gas. So we should be higher. But still, a 460 just seems like a rich handle in nat gas. And we were hanging out 3 to 3/4, 3.5, even below that for a long time this year. Up about 30 cents this week, or nearly 7%. So obviously, nat gas outperforming a bit. If we go to the end of our show last week, it's up 7.5%. And then putting up some numbers out there again this week. 1.18 million contracts. So nearly 1.2 million contracts already changing hands in nat gas. So Mr. Rhoads, once again, another week where nat gas putting up the numbers, just putting the lie to the notion that your underlying needs to be above $5 or $10 to do options flow, sir. What's catching your eye in nat gas this week?
It's completely opposite of what we were just talking about as far as call versus put activity and price activity. It's been a long time since I've traded anything other than just crude oil based on what Carly tells me to do. But I can't really recall the two going in an opposite direction like this, but I don't focus on them the same way that she does. More upside. It's really interesting. The call it looks like a mirror image of what we were just talking about with crude. Expensive calls, cheap puts. Expecting. I almost feel like there's probably some sort of spread trade that you could do within there. But it's like full steam ahead for nat gas, and crude oil looks horrendous right now.
Nat gas putting up the numbers this week, 66.5%. So fully 2/3 of that over 1.1 million contracts, listeners, going up in the D's contract. Has 11 days to go. We will hang out there. The vol almost a 67, ticking up nearly 6 points this week. So starting to get a little bit spicier. Obviously, we've seen nat gas vol get much higher into the low triple digits. Not quite there, but bouncing off of the lows in the mid to low 50s. It seemed like it was languishing in for a while. Skew-wise, as Russell pointed out, the calls catching a bid, losing some of that this week. They were about 7% bid last week, 3% bid this week, so kind of getting cut in half. The puts, 4% cheap last week, 2% cheap this week, so getting cut in half there as well. So skew kind of coming in on both wings, even though leading the dance out here this week was nearly 100,000, 99,800 to be precise, of these 4 puts. So 4 puts are where the action is right now in Dees, listeners, in nat gas. Just almost 100,000, trading 40,000 on Tuesday, 24,000 on Wednesday, 22,000 today, 14,000 on Monday. Looks like opening every day. 44,000 contracts open coming into today. So 4 puts, kind of a wild strike. Right below it, we have the 3 3/4 puts going up about 80,000 times this week. Again, the big day was Tuesday, so maybe some 4 3 3/4 vertical action going up. Opening on both legs, so not a roll. And then we have 13,000 today, 17,000 on Monday, 8,300 on Wednesday for the 3 3/4 puts. Again, opening every day this week. And if that's not far enough out of the money for you on the put side, how about the 3/2 puts trading about 35,000 times this week? The big day also Tuesday. So Tuesday, the hot day for nat gas puts, 20,000 going up on Tuesday, about 4,800 each day, Monday and Wednesday, and about 5,700 today. The OI on that strike, 54,000. Unless you think it's all puts all the time, how about the 5 calls changing hands 63,000 times? Looks like the big day was also Tuesday. Obviously, Tuesday, nat gas day this week. Nearly 30,000 contracts changing hands on Tuesday. Looks like it's slightly closing. So maybe some folks deciding 5, potentially a bit of a bridge too far and bailing on those. 14,000 on Monday, also closing. 12,000 today against an OI of 46,000. So if they were closing, there's still 46,000 contracts open. And then about 8,000 going up on Wednesday, slightly opening there. So kind of a wild tale out here this week in all things nat gas. You don't even need to look really past December. That's where all the interesting paper is going. Unless you're really excited about 6 calls in January of next year. They did trade about 22,000 times out there this week, listeners. So a lot of wild stuff out here in nat gas this week. By the way, if you're looking for these Jan 6s, they're trading for about 15 cents out there today. D's 5s trading for about 8.5 cents. The D's 4 halves, 23 cents. D's 4 puts, a whopping 4 cents. The D's 3/2 puts, a fraction of a penny out here. And the D's 3 3/4 puts about 1 to 2 cents. So there's your ballpark for pricing. And Mr. Rhoads, anything else catching your eye in the world of nat gas, sir?
No, not really. It's just, both sides are expensive. I don't know if a neutral trade would make sense here or not. I mean, you got demand on. Well, I don't know. I got to think this one through. I got to stop thinking out loud sometimes too. So no, I'm just taking a look at thinking about looking at some expensive options in either direction where we're seeing the buying that we brought up, and maybe just seeing if there's something to do if you think it can be somewhat range bound, and you can probably make money on a pretty wide range these days on this one.
Thinking out loud is what this whole show is about, Mr. Rhoads. I do it all day,
sometimes that gets
day.
you in trouble.
Yes, it does. But that is the name of the game here at the end of the day. That music means we've come to the end of another interesting journey, but we got a couple of minutes here. If there's one quick complex that kind of flew under the radar but caught your eye and you wanted to mention it for a few minutes, have at it, sir, Mr. Rhoads. The floor is yours.
I was looking at the equity vol, and it really looks like you might have an opportunity here, and I'm anything but bullish, and you know that. But the only index that that continues to experience any sort of a Santa Claus rally is the Russell 2000. And the out of the money calls are pretty cheap right now relative to the out of the money puts. So, just if we had I was going to ask if we could go to equities next and talk about this a little bit. But we actually do see in December the skew flatten a bit to the upside, and actually see out of the money calls at a premium versus out of the money puts periodically. So just the demand for those options around what is a perceived Santa Claus rally might be something for people to start taking a look at in about a week and a half or so as we get past Thanksgiving.
The Russell is more than your namesake. I've been saying for a while, small caps have been where a lot of the action has been in the equity complex. Volume-wise, volatility-wise, it's delivering. It's moving 1.5% a day. It's putting up nearly 2 million contracts just in IWM, let alone on the Rhoads options and everything else. So it's been a wild beast. If you're sleeping on small caps, listeners, you do so at your and indeed your portfolio's peril. But that said, Mr. Rhoads, if folks want to keep up with all of your vol musings, no matter what products they might be on, where should they go? What should they do?
Just follow me on the Twitter. Full name, Russell Rhoads, Rhoads. If anybody's at the Quant Mines International next week in London, find me. I'm going to need to be talked down from the brain hurting that goes on at that thing.
Quant Mines. So you're going to be beaming in from across the pond again next week.
I just might.
Would have been good to do the European market brief from London. Then you would have had boots on the ground, sir.
Yeah, I'm going to see our friends over there while I'm there.
So it should be good. I look forward to the insights from the Quant Mines conference next week. In the meantime, listeners, you know where to find them. 2 S's, 2 L's, Rhoads on your favorite social media platform. He's probably lurking there, musing about vol in some way, shape, or form, or talking about the massive gold hoard and the potential for global thermonuclear war. He also gets a little dark. Follow him over there on the old Twitters for more fun. And then, of course, you know where to go to keep up with everything we do here on this show. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires. That's going to do it for us on TWIFO today. Not going to do it for us on the network, though. I'll be back in about an hour after the closing bell to break down all the days' worth of activity on Thor. No, not the son of Odin, but the Hot Options Report. So check that out. Yet another reason why you should be subscribed to the full network. Then I'm back again tomorrow, noon Central, 1 p.m. Eastern. Dr. Vicks in hand. Maybe some special guests. We'll find out. To talk all things vol. Then we'll wrap up the week with the official after party for vol views, known as Options Oddities. Then, of course, we wrap up the entire week for everybody with a little bit of the Hot Options Report. Then we're back again next week, all the way to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.